Hello guys, welcome to another video. If it's the first time you see in this video or this channel, my name is Sad and this is my channel, The Trading Journey. And in today's video, as the title states, we're gonna be talking about the trend. So the video will cover how to identify the trend, what are the types of trends out there in the market, which type of trend you should follow and which type you shouldn't, and also we're going to take the key levels we've learned in the previous video and implement them on the trends in order to know or in order to find a trade. Let's start today's video. Welcome back. We're gonna start talking about the types of trends in the forex market. So there is three types of trends or markets. The first trend called uptrend. I'll put it here. The second trend is called a downtrend. And the third trend or the third market is called consolidated market or trend. So the uptrend is when the market is going up, then goes back a little bit down, goes back up, a little bit down, goes back up, goes a little bit down, and goes back up. That's an uptrend. That's when the market is buying and there is a buying move. There is the second one, as I said, it's the downtrend. That's when the market is doing the opposite of an uptrend. When the market is going down, pulls back up a little bit, goes back down, goes back up, go down, pulls back up, and goes down. That's a downtrend. And it is usually when the market is selling. So it's a selling move. Then there is the last part or the last trend, and it's called a consolidated market or trend. So it's when the market is now moving out of a box. It's going up, going back down, going up, going back down, going up, going back down, and going up. The market is literally in a small box. It's not moving out of these lines at all. Alright, so there is three types: the uptrend, downtrend, and consolidated market. Right? So most traders out there, the professional ones or the professional part of it, they don't trade the consolidated market. The reason being is that if the market is going up, they don't know if the market is gonna break out of this box and start going up and give us an uptrend, or breaks down and give us a downtrend. What do I mean by that? So imagine you buying the market here, right? And your take profit is somewhere up here, but then the market comes here and goes back down. Then let's say you sold the market here and your take profit is here, then the market goes against you and goes all the way back up. So why would you do it? You don't know if the market's gonna break down of that box. You don't know if the market's gonna break out of that box. You don't know if the market's gonna stay like that. So why would you play with it? And we like to go with the simple moves, with the clear moves. We don't want to do consolidated market, so we don't trade. I personally do not trade consolidated market. I used to, but not anymore. All right. So the first market, as I said, uptrend and downtrend. We forget the consolidated market. We don't want it. I'll put a big X on it. Where is the where is the X? Right. Big X will consolidate the market. We don't want it. We don't like it. So no. We only trade a downtrend and an uptrend market. So now I'm gonna move to the second part where I'm gonna show you which one is the uptrend and which one is the downtrend on the actual market. So we'll start with uptrend. So let me delete this. Then we break it down to only two types because we don't want the third type. Right. So this is uptrend, as I said. The market is going up, pulling back, going up, pulling back, going up, pulling back, and going up. And there is a downtrend where the market is going down, pulling back up, going down, pulling back up, and going down, pulling back up, and going down. Right. So let's identify an uptrend market. We're not gonna go through details. However, I'm just gonna show you from far so you don't get very confused. So what did we say? An uptrend, the market is going up, down, up, down, up, down, up. Therefore, the market is buying and it's going all the way up. Look here, perfect example. Market is going up, going down, 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 and going up. That's called an uptrend. And if you get very confused, let's say the market looks like this. Um, let's say the market looks like this. You won't be able to identify if it's an uptrend or downtrend. But if you stretch it a little bit up there, you will know that this is an uptrend, as I told you. It looks very similar to this one. So that's the first side. That's an uptrend market. This little box here until here is an uptrend market. Right. So now, actually, we have a downtrend market here. I hope you can see it. So downtrend market, it's already happening here. Let me delete this one. So uptrend, as I said, the market is going up, pulling back down, going up, pulling back down, going up, pulling back down, and going up. That's an uptrend. Therefore, the market is buying. It's going up. There is the second type, which is the downtrend. When the market is selling, therefore it's going down. You can clearly see it here. Market going down, goes back up, going down, goes back up, going down here, goes back up, going down, goes back up, going down, goes back up, and going down. It's very, very, very clear. So this is how you identify if the market is bearish or bullish. So if the market is not doing something like this, therefore it's not selling. It's not bearish market. It has to be doing something like this to be a bearish market. If the market is going up like this, it's immediately in your head, you will think it's a bullish market without overcomplicating it, right? However, something that I want to add on this, something that I didn't tell you yet. Let me delete this. So, based on the last 2 years in the market, what I've noticed is the market is a mix of three trends. As I said, there is uptrend. Let me do it nicely. There's uptrend. There is downtrend. And there is the consolidated market. So what I was going to say is, in the real market, the market will be uptrending, going up, then it's gonna consolidate. After an uptrend or a downtrend, there is a consolidated market. Not all the time, but mostly. Then the market will either continue up. So this is the first type. The market will be going, let me use a brush, will be going up, then will consolidate, then it will either go up or go down. I'll use the brush again. And either do something like this. It's going to be going down, then consolidate here in this box, then start going down again. So after every move, there is a consolidation. That's what I've noticed in the market. So if it's uptrending, it's more likely gonna have a consolidated market within it and go down, or have a consolidated market and go up like this. There is only two moves after consolidation. There's either the market is gonna go up or go down. So in order to identify it, it has to look something like this. Therefore, it's an uptrend. Or it has to look something like this. Therefore, it's a downtrend. We don't trade consolidated market. So we trade here. We trade this box. Then this box, I'll put it red as we don't trade it. We don't want it. Then we either trade this box or this box. So the gray boxes, we trade them. The red box, we don't touch it because you won't really make loads of money from it, to be honest. There is traders out there that do trade consolidated market. However, I do not advise it because like it just doesn't make sense to me. Because if you sell here, the market might buy, and if you buy here, the market might sell. So why would I risk it? Let's identify another bearish and bullish market. Let's go, for example, to EURGPY. Right, I already see a downtrend here. Very, very clean. So the market is going down, pulling back up, going down, pulling back up, going down. There's a pullback here, going down, pullback here, going down. So from the beginning of this arrow until the end, you're only looking for sells. You don't look for buys because you want to go with the market. You want to go with the trend. You don't want to break the trend. So if the trend is bearish and the market is going down, you do not buy, you only look for selling opportunities. And if the market is going up like this, up, down, up, down, up, down, up, down, up, down, up, down, up. If the market is looking like this, you only look for buys, you don't look for sells. Why? Because you want to go with the trend. You want to go with the market. Why would you go against the market? And if you ever heard something says the trend is your friend. The trend is your friend. Therefore, you need to follow the trend. You don't go against the trend. If you do, you might lose. And as I said before, after every move, there is a consolidated market or the red box that we don't trade. So this is the gray box. that we trade, guess what? There is a red box here. Look at the price. The price going up and down, but it's not breaking out of the box. We put it red. We don't trade red. There we go again to the gray box. I'll take it from here. This is the gray box we trade. This is the gray box. So we only trade the gray boxes. We don't trade the red boxes. As I said, look, the market was going down here. Then it start consolidating here. Then it will either break up or break down. But in this case, it broke down, then start going up. It's very, very, very simple. If the market is not downtrending or uptrending, you don't touch it. You wait for it because you want to go with the big move. You want to go with the big volume. You don't want to go with the small move. So in this video, we explain the trends: uptrend, downtrend, consolidated market, as well as what markets you should trade, in what markets you shouldn't. And now I'm going to give examples of the key levels I showed in the previous video, and how you can combine the key levels and the trends together in order to come up with a trade. Alright, so as I said before, let's say this is my key level. If you watched the first video or the previous video, you'll understand what I'm talking about. Let's say this is my key level, very strong level. The price, when it comes to it, or when it came to it in the past, it bounced back straight down. When it came back to it, touched it, and bounced back. So that level is very, very, very strong. This is a strong level, right? And let's say our market is downtrending. The market is going like this. So if the market is going down, obviously it has to pull back, as I said. So if the market does pull back in this level, there is a very, very, very high chance that the market will go down. Why? Because this level, there is multiple bounces from this level. It's a very, very strong level. The market is downtrending, it's selling, and it's touched our point. So why wouldn't you sell? There is a high opportunity there that you will win the trade, because you are, first of all, going with the trend, you selling, it's downtrending, it broke this level and retested it, so it came back to our very strong level. So that's how you actually sell. So for me, in a perfect scenario, I will sell there. I won't sell anywhere else because this is my golden level, if that makes sense. Same for uptrending. Let's say the market is going up, broke my level. I will wait for the market to come back to this level because it is my golden level. Then I'm gonna start for buying opportunities here on the blue line. Why? Because the market previously came to this level, went down, came to this level, bounced back up, came to this level, start going down massively. So why wouldn't I respect this level? It's a very, very strong level. So I want to stick to it. So that's how you implement an uptrend with the key levels that you identify. If you don't know how to identify major key levels, just watch my previous video and you will understand what I'm talking about. This will be the end of the video. I think it might be a 20-minute or 21 minutes video. However, I believe the value in it is good enough to take our time. Thank you very much for watching. If it's the first time you're in the channel and you like the video, make sure you subscribe. Just subscribe to our channel to get more value in more videos. Thank you very much and have a blessed day.